Hello guys, I'm back again with another exciting video, and in today's video we are going to be analyzing GBPUSD and XAUUSD. Like I always say, always start your analysis from a higher time frame to give you the clear picture of what the market is doing and what the market is about to do. Now this is GBPUSD, as you can see on the daily time frame. Last week, from our analysis, we saw that this was the previous high that price invalidated. Now from last week analysis, this was a break of structure, making here our daily swing structural low, our daily swing structural low. If this is our daily swing structural low, this will be our daily swing structural high. This will be our daily swing structural high, which means from this range down to this range is our internal leg, where we now have another break of structure on the daily time frame is if price invalidates this high. So currently price is at this level, so until price invalidates this high, that is when we now have another break of structure on the daily time frame. If price invalidates this high in this new week, this will now be our daily swing low. But currently this is our daily swing low and this is our daily swing high. So from this analysis now we can clearly see that on the daily time frame price is bullish, price is printing bullish market. Now let's jump down to the 4 hours time frame. Now on the 4 hours time frame, as you can see, last week I also indicated that this was the low that price invalidated, that 4 hours time frame became bearish. After that low was invalidated, this pullback happened. This pullback from this level down to this level, this pullback happened, and immediately after this pullback we saw another break of structure on the 4 hours time frame. Now if this is a break of structure indicating that the 4 hours time frame is bearish, this is a break of structure that indicates that 4 hours time frame is bearish. Now this, for 4 hours time frame to be bullish, this will now become our swing high. This will be our swing high. Now what did price do? What did the market do? The market came back and invalidated this high. Now the market invalidated this high, making our 4 hours time frame to be bullish. Now we have switched from bearish to bullish. If this was our break of structure on the 4 hours time frame, this will become our 4 hour swing low when price invalidated this structure. What did price do? Price actually came back, did this pullback, got to this level and invalidated another structure here. If price invalidated another structure here, that's we confirm that our swing low will no longer be at this point. It will now shift to this point. Now the reason why I'm indicating this whole thing is for you to understand how to read market structure, how to know the structure of the market. Now if this is our swing low and this is a pullback, this is supposed to be our swing high, but currently what did price do? Price invalidated this structure. Price break through this structure to the upside. Now this will now be our recent 4 hours swing low. Now we don't have a swing high yet. For us to have a swing high, we will definitely need a pullback, and as you can see there is no pullback yet. We definitely need a pullback into this level or this level, then a continuation. But currently we don't have a pullback yet. Until we get that pullback, price is still bearish. But if price decide to come back and invalidate this structure, that means our 4 hours time frame have switched from bullish to bearish. But currently we are bullish. Now let's jump down to the 15 minutes time frame and see what price is doing. But before then, you can see how price, the 4 hours time frame, has aligned with the daily time frame. Remember that this is our daily break of structure. This zone is our daily break of structure. Now if that zone is our daily break of structure, this is our daily low and this is our daily high, and this is our H4 low. We don't have H4 high yet. Now let's jump down to the hourly time frame and see what price is doing on GBPUSD. Now on the hourly time frame, you can clearly see that price is still what? Bullish. Price is very bullish, in a bullish trend, in a very strong bullish trend. Now on the hourly time frame, we can clearly see this demand level, that I'm expecting price to pull back to. This demand level is a strong level. Why? Because there is an imbalance sitting right at this point. This demand level is very strong. Why? Because there is an imbalance at this point. Now this is the imbalance I'm expecting price to be, not a continuation. Now when price comes into this level, we know how we do it. We are not going to buy direct. We are going to look for what? A shift in market trend, or a change of character, like you can call it, and a continuation to the upside. If you can get this change of character, a pullback, then a continuation to the upside. So that is how we're going to approach this market in this coming week. Now let's jump down to the 15 minutes time frame and see if we can get a quick trade on the 15 minutes time frame as the market is opening. Now on the 15 minutes time frame, as you can see, on the 15 minutes time frame, there is nothing actually happening on the 15 minutes time frame. From that our hourly candle, on the 15 minutes time frame, you can actually take a risk entry on the 15 minutes time frame. That means you will have to refine your entry to this level. We have to refine your entry to this level and place your stop loss at this level, but the stop loss is going to be too big, around the 24 pips, and you target this high. It's still okay, 1 to 3, but if you want to take a risk entry, it's okay, 25 pips, not that bad. But if you don't want to take a risk entry, you look for a confirmation entry. But this is a very nice trade that I'm seeing. Why? Because there is an imbalance and there is this liquidity sitting at this whole level. There's an imbalance and this liquidity is sitting at this level. So this is a very nice trade. That is analysis for GBPUSD, a very beautiful trade. So let's jump down to XAUUSD and know what price is doing. XAUUSD. This is our chart on XAUUSD on the daily time frame. Now as you can see on the daily time frame, what can you clearly see on the daily time frame? Price is what? Bearish. Now let's read the market structure and know why price is bearish, why I said price is bearish. Now on XAUUSD, we first of all had this break of market structure that occurred at this point, and here becomes what? Our swing high. Here becomes our daily high. Now if here is our daily high, a pullback occurred at this level. A pullback occurred at this level, and another break of structure happened here. If this is another break of structure, this will no longer be our swing high. Our swing high will now come to this point. Now if this is a break of structure, another pullback occurred here. As you can currently see, another pullback occurred here, another pullback occurred here, and another break of structure. Now if this is another break of structure on the daily time frame, this will no longer be our high. This will become what? Our what? Swing high. This will now become what? Our daily high. If this is our daily high, this is what? A pullback. This is a pullback on a daily time frame. So that means this our what? Daily swing low. So from this level to this level, the whole of this move is what? Our internal structural move, internal structural range. Now let's jump back to the 4 hours time frame and see what price is doing on this internal move. Now on the 4 hours time frame, as you can clearly see on the 4 hours time frame, remember this is our daily low and this is our daily high, but on the 4 hours time frame we had this what? Sweep of liquidity. The reason why I'm calling this place a sweep of liquidity is because the candle didn't close with a body candle close. As you can see, let me remove this. As you can see, this candle that broke the structure, this candle you are seeing, did not close with what? A body candle close. It just closed with a wick. And the second candle came, which is this blue candle, still came back, swept the low, but didn't still close with a body candle close. Instead, it went up, came down, and continued going up. So this is a sweep of liquidity on the 4 hours time frame. If this is a sweep of liquidity, this will now be what? The 4 hours time frame structural break of structure. But on this XAUUSD, I'm not seeing any meaningful move, because if you actually see what is happening at this level, you can see that the market is in some kind of range until we see a break of structure above this range. I don't think there is anything you can do on XAUUSD. The only place you can see trade is on the lower time frame, which is actually risky, because a ranging market can actually sweep the high, sweep your low, clear your stop loss for buy, clear your stop loss for low. So it's kind of risky. Now let's jump down to the hourly time frame and see if we can get a clear market move. Though I don't trade XAUUSD, I only trade GBPUSD. Now for those that trade XAUUSD, this is XAUUSD on the 15 minutes time frame. I don't trade XAUUSD, I only trade GBPUSD. I'm just doing this video on XAUUSD for educational purpose. I don't trade XAUUSD. Now I can clearly see in this internal range that the 4 hours time frame is ranging. I can see a break of structure and another what? Break of structure at this level, and there is another what? Break of structure to the upside, invalidating this high, and some kind of level that is not clear and is not safe to trade, because there is no imbalance. Now if you check this candle, it has been mitigated by this candle that's supposed to be a demand level. It has been mitigated by this move. It has been mitigated by this move. Now the next zone, which is supposed to be here, has also been mitigated by this move. So that's why I said XAUUSD is ranging. You can trade it, but it's at your own risk. Now coming down to this place, another what break of structure occurred here. You can see now another break of structure occurred here. Now you say, okay, now let me sell. You say, let me place my entry at this level and let me sell. You can see how price is moving back and front at your entry. Now let's say this is your entry. You say, okay, now let me sell. You can see how price is moving back and front at your entry. Price is moving at your entry, going up, going down, and you place your stop loss here. There's every tendency that price might clear this your stop loss and keep going up or keep coming down. So it's not safe. If you say, okay, let's take the whole of this zone as liquidity, as double top, as liquidity. Now let's place our sell here. Which look very nice and very okay. But remember, this is another break of structure to the upside here, making this level a demand level, and what it has been mitigated. Are you not seeing it? It has been mitigated already. Price has already tapped into that zone. And price went up. Tapped into that zone and what went up. Came down, went up again. Now coming down. If you say you want to sell from here, there's every tendency that this price might move and clear the whole of this level and break another structure to the upside. And there is every possibility that price might come back from this level and break structure to the downside. That is one of the reasons why it looks as if that ranging market is very difficult to trade. Once you see a ranging market at any specific time frame and you jump down to the lower time frame, there is nothing to trade. The market is not clear. The best thing to do is avoid that pair, avoid that market, avoid that price action. Just avoid it. Don't force trade, because you forcing trade, it will hurt you. The market will hurt you. Like I keep saying, that this market does not respect anybody, and this market does not know anybody. It does not know whether you are losing or you are making money. All it knows is I'm moving. So if the pair you are trading is ranging, avoid it, avoid the market, or you look for another pair to trade. I still remain your one and only Nicholas Capital, and I will see you in my next video.